Happy Monday after a long weekend. I'm Kevin Davitt with SIBO's Options Institute, and this is Volatility 411. Now, as I mentioned, we're back from the holiday weekend, and equity markets in the U.S. are moving higher today. Last night, the S&P 500 futures traded slightly lower before ripping higher alongside the Asian markets. Now, China specifically had a banner day with the CSI 300's strongest performance in over a year. As of recording, the S&P 500 index is higher by about 1.5%. That's up about 50 handles to 3180. The VIX Index is unchanged and measuring right around 2765 after the holiday weekend. Now, 20-day SPX realized volatility is measuring around 30, which perhaps argues for some of the recent VIX stickiness. The economic calendar is fairly light this week ahead of a busier next week. Now, it's arguably worth mentioning that earnings will swing back into gear next week with big banks slated to report in the middle of this coming week. Now, back to VIX and the VIX futures curve. The front of the term structure is upward sloping or in contango. The October premium to both September and November is pronounced. VVIX, which is a consistent measure of 1 month volatility for VIX options, is back down to about 115. Now, the standard July VIX options expire on the 22nd of this month, so it's just over 2 weeks from now. And at the money, the July 28 straddle is pricing around 580, which implies a range of about 3380 to 2220 over the next couple of weeks for VIX. Now, obviously, straddle prices can and will change over time. Okay, we're into July with the broad market pressing resistance levels yet again, and volatility levels remaining relatively sticky. It'll be interesting to see what shakes out over the next couple of weeks, as always. Now, that's Volatility 411. Thank you very much for tuning in.